Ask any trader why they lose, and they'll give you 101 made-up reasons. The markets are manipulated, my stop loss gets hit, the markets are rigged against me. I can tell you now, it's none of those reasons. It's not the market that causes you to lose, it's how you react inside of the market. So in this class, and in 2 follow-up classes, I'm going to be teaching you everything you need to understand as to why you're not winning, and how you can turn your results around by fixing a few simple core principles. With that said, let's get to it. So over the coming days, I'm going to teach you why you're not winning and how to turn your results around. We are going to look at the technical mistakes costing you consistency, the risk principles that every losing trader ignores, and the implementation flaw that guarantees your failure. Today, we're going to start at the surface level, the charts, the things you see first. And what we're going to do is help you to understand and knock down the 3 big technical barriers that hold you back from your ability to succeed at trading. And it doesn't matter if you've been trading for 2 months, 2 years, or 2 decades. The fixes to these problems and the problems themselves are all the same. So regardless of where you are in your journey, you will find value in this class. Let's begin. First, with the perpetual rebuild loop. How many times have you learned a new trading concept, applied it for a few weeks, and then come across something, quote, better, and replaced everything you were doing before? You tell yourself you're improving. You feel like you're filling in more pieces of the puzzle. But really, you're just rebuilding the same broken system behind the scenes under a new shiny wrapper on the front end. You think you're evolving, but you're actually just looping. Now here's what the perpetual rebuild loop looks like visualized. You find a strategy, you feel optimistic about this strategy, and you think this is the one that's going to take you to success. You apply it for a few weeks through some wins and some losses, but when you start losing, you start to tweak the system. You start looking for new shiny objects. Eventually, you lose confidence, hunting for something better, and then you give up on it entirely, find yourself a new strategy, and then start the cycle again. Traders stay trapped in this cycle forever. It's why they know everything, 100 different concepts, 50 different strategies, but never end up achieving anything. It's because they abandon every system before it's had a chance to work. So here is what the progress path of an average trader looks like. Every time you pick up on a new system and start trading a new approach, you make a small drive in the right direction. You start moving towards your success. But then, you switch your systems, you kill all of the progress you made up to this point, and you endlessly hard reset your trading progress down to 0. It's like starting all over again, consistently every few weeks. See, what your progress path should look like is this: a slow run into exponential growth. And this comes from trading one system, optimizing this system, and really getting to know how it works. When you jump ship all the time, you throw all of that progress away, and you never leave room to create the exponential growth. Now, a strategy doesn't work just because you found it. It works because you master it. No system is optimized on day one. You are always going to have losing trades, and you are always going to have to improve a system and really build experience with it before you can actually win. It takes time, data, refinement, and real feedback to reach consistency. And the losses you take in a system in the early days are not proof that the system is broken. It's not the market telling you to go and find something else. It's simply part of either natural variance or the learning curve in your experience building with this system. So if you abandon a system the moment that it struggles, you will never give it a chance to prove whether the losses were short-term, part of the edge unfolding, or actually something bigger. You will simply never know, because you throw every system in the bin as soon as it gives you a single loss. So here's a stark reminder, or new information if you didn't know this. Almost any strategy in the market at all can work. Now, because we're trading in a probabilities-based market, there is no right or wrong way to trade. You can win with support and resistance, you can win with supply or demand. It doesn't really matter because the profits are made in the back end, not on the front, not in the charts. It's not about finding the system that wins every trade, because I promise that system does not exist. It's about building one that wins over time. And while some strategies are definitely better than others, the truth is, if you stuck with almost any approach long enough, you could make it work. So your first action step to becoming a better trader is to break this perpetual rebuild loop. And to do this, it's very simple. I just want you to choose one strategy that aligns with your style, master it, and stick with it. Eventually, you'll see that exponential growth, and you'll realize how much self-sabotaging you've been doing by running through this loop for the entire duration of your trading so far. So you know you need to lock in on one strategy, but you might ask, what strategy should I pick? Well, that leads us on to topic number 2, the misaligned logic trap. This is all about trading with concepts that just don't give you enough information. So have you ever wondered why two traders can use the exact same chart? One makes money and the other blows up. It's not psychology. It's not discipline. It's logic. See, most traders think their trading is strategy. If I were to ask you now, you might think you have a strategy in place. But what they're really doing is reacting to the market with hope and a basket of messy concepts that they chuck on the chart and hope that something sticks. They don't understand the why behind the entries, the positions, and the trades they take, only the what. So here is the logic gap. This is the big problem we need to discuss now. All of us as traders start over here in the concept bracket, and we all want to get to successful execution over the long term. But there's a gap, the logic gap, that stops us from getting there. Now, if you trade with a basket of weak concepts, so you're trading with concepts that don't align with the reality or understanding of the market, and you miss context on what it is that actually makes these concepts work, you're never going to get to successful execution by just trying to jump from concept all the way there. What you need is to bridge the gap, and we bridge this gap with logic by trading logical concepts and building stories around the market so we understand exactly what it is, the context that our concepts can fall into. Context plus concept creates successful execution. Concept without context sends you into the pit of despair. So here's how I suggest you trade. This, over my 9 years of experience in trading now, is exactly the approach that I've come to. And this is the approach I've taught thousands of others that they've seen results with as well. So cause. The first thing we want to do is understand the story the market is telling us. What is the market telling you? And why is the market doing this? When we have that clear narrative in mind, we can shift to effect. What scenario will this create? And how can we react to it? And when we have our cause and effect set in motion, we can shift to outcome. How do we turn this into a win? How do we engineer positive outcomes? So it's all about reading the story of the market and then using that story to identify what the most profitable movement is going to be in order to secure profits. Now, the biggest mistake that most traders make is missing the cause, the why. Traders jump from concepts to execution, but they don't understand the story the market has told them. So if you're trading with patterns or indicators or any boring lines on a chart strategy that really isn't grounded in logic, or even if you're trading with smart money concepts, but you don't understand the story behind the candles, well then you're trading blind. You're simply chasing price, you're not reading it. If you want to trade with real conviction and you want to get long-term results, you have to see the why behind every move, which means looking at the market through the lens of narrative, which is essentially just reading the story, not prediction. So here's my advice to you. If you're not trading these concepts now, or even if you are, but you haven't looked at why they happen, I want you to study candlesticks, market structure, so that's high and low structure, supply and demand, liquidity, efficiency, and momentum. With these concepts, you are tracking pure price action and nothing else, which allows you to learn the why behind what the market does. Now, I'm going to be covering all of that more in lesson 3, but this was an important point to put across to you at this point in time. So your second action step is to stop trading concepts that don't make sense and build your approach on logic, not luck. Choose concepts that explain real price action, not just draw around it. And that is how you bridge the gap between what you know and how to actually win long term. It's all about systemizing logic-based concepts, just like the ones I've showed you in this list. And that drives us through to point number 3. The third big barrier that will stop you from succeeding is discretionary chaos. So be honest. If I asked you to show me your rulebook, could you do it? Or are you just clicking buttons in the market based on what looks good? And if you answered yes, you could show me the rulebook, well, do you actually follow it? Or did you just write it once and throw it in a drawer, never to be seen again? Discretionary trading is when you make decisions in real time based on instinct, emotion, or what feels right in the moment. No clear process, no repeatable logic, just impulse dressed up as experience. Now here is the problem with discretionary trading. The idea behind successful trading should be we start and we follow one clear-cut path all the way across the journey through to our success. This is on an individual trade basis, which then turns into a larger career win basis. However, when you trade with discretion, there is no repeatability, there is no system, there is no path to follow. Everything is totally random, which means your trades today will look completely different to your trades tomorrow. The trades the day after that will look completely different to those trades, and so on and so on and so on. Everything is a chaotic mess, which, first of all, isn't good for your mind, and second of all, rarely ever actually lands you on target. You miss success because everything really relies on a gamble. Now, what we want to do, and what you should be aiming to do, is create a clear-cut path from start to success. And we can do this in a few ways. We do this generally by creating an if this, then that strategy. So this is a strategy that creates multiple scenarios, and it forces us only to take trades that the market tells us we should take. Nothing is ever forced by us, we just react to what the market tells us to do. So here's an example of what this if this then that trading format looks like. We have a market that is trading to the downside. We may want to sell this, but we don't really know. Maybe it will go higher as well. So we would create some if this then that scenarios. First would be, if we get confirmation, I will sell. Second would be, if supply fails, I can buy to the next sell zone. So now we've created two scenarios, if this, then that. If it confirms down, we sell. If it confirms up, we buy. And all we have to do at this point is simply wait for the market to tell us what to do. Now, the best way to achieve lasting consistency with this kind of format of trading is to build your trading into a rules-based flow. Rather than trading discretionarily every day, coming to the markets and just throwing your concepts on and hoping something sticks, follow this flow. This is a rules-based flow. This is what I do myself. So we want to turn trading into morning analysis. You do your analysis, you see if a setup is present. If your setup is not present, you don't take a trade. If it is, you check additional entry criteria. If your entry criteria is not met, you don't take a trade. If it is, you will check any additional considerations like economic news events. If everything is met there, then you actually finally take a trade. You end up taking only the best possible setups when you trade in this way, because everything that could potentially lose is filtered out. Now, obviously, this isn't always going to win, but you are going to be taking the highest grade possible trades. And as well, this cuts your trading down to 60 minutes or less per day and keeps your mind clear. You're following a simple, repeatable process. It really doesn't take too much energy to just continually repeat this process. And this will create a scenario where you end up with no random positions because every trade looks practically the same. It follows the same blueprint, follows the same flow. You'll be left with no stress or worry because the market feeds you the obvious trades and you don't have to spend any time trying to force any others. When you trade in this way, consistency is baked in because everything is systemized. You're always simply following the directive of the market. You're not forcing anything and you're not having to go fishing for the next opportunity. The market will tell you when to trade. And look, this is going to take patience. You will have phases where you're waiting for trades and there aren't any. But good systems tend to violate human nature. Humans are impatient creatures. We want to make money. We're greedy. We rush. Systems don't do any of this. And you need to understand if the system feels uncomfortable to apply, that oftentimes is a good thing because human nature doesn't really work in trading. Rules-based systems do. And they fix this problem by taking the guesswork out of your hands and systemizing everything for you. So here's your third action step. You need to stop relying on gut feel. You need to build your trading around structure. A structured routine, schedule, and system. Every decision you make should have logic behind it in an if this, then that format. That's how you remove emotion, create repeatability, and finally make consistency inevitable. So now let's recap the 3 big barriers that I've helped you to knock down today. First, you need to break the perpetual rebuild loop. So find yourself one individual strategy and stick to that until you reach exponential growth. Second, bridge that logic gap. Make sure you're trading these narrative-based concepts, these concepts that tell the story of the market, structure, liquidity, supply and demand, real price action, and then eliminate discretionary chaos. Inside of this strategy, when you're using logic-based concepts, build in an if this, then that, rules-based flow, and stop taking random trades. They rarely ever work. If you do this and you follow these 3 action steps, you will see your trading performance completely transform for the better. And this is how you finally break free of the endless cycle of doom that you've been stuck in for however many months or years it is that you've been trading up to this point. Many of you won't do this, but those that do will see the results. So your final action step is to click the link in the description to join my email list. You're going to get expanded lessons on these topics ahead of episode 2, where we talk about risk and the math behind successful trading, which in my opinion is even more valuable than this one. I'm going to be showing you positive expectancy, why perfect setups don't exist and why it doesn't matter, variance, how you can be fooled into doing the wrong thing and how to avoid that, and risk mitigation, how you can survive long enough to see your edge play out. So turn on notifications to make sure you don't miss that class, and of course, join the email list using the link in the description for mini lessons between here and there. I'll see you in the next class.